No, yes, I said already in my presentation. I think it's clear the impact on prices. I would like to say unprecedented, but let's not, what is interesting, in my opinion, is that we arrive at this situation in Ukraine after we already saw an unprecedented rise of prices since mid 2020, let's say last quarter of 2020. So it's interesting because we're commenting this situation, which is true. It's fueling an unprecedented reorganization of trade, therefore impact on prices and so forth. But we arrived to this after actually less than 2 years ago. We lived almost the same situation with prices rising in Europe in particular, but let's not forget what prices did in North America, for example. Every week they were jumping by 100 euros or $100 in that sense. So we are in a very fluid situation. What I would say is that the market, in my opinion, already knows that this volatility is part of it. I mean, so it's maybe a little bit quick. I mean, it's readier to react to price volatility. The main issue is what Katya said, is reorganizing trade patterns, because as we mentioned, Europe cannot import finished steel prices from Russia, included in the safeguard measures. In theory, it could continue to import slabs and billets. The problem is, this is only in theory, because of course you need to avoid doing business with sanctioned companies, avoid doing business through sanctioned banks, and then you have also to be willing to take the risk that anything happens, risk of non-delivery or whatever. So of course the reorganization is very huge. So yeah, I mean, in terms of prices, yes, it's unprecedented. The jump is there. I think everyone can comment on this. But it's interesting that a year and a half ago we saw for 9 months the prices rising and rising and rising and rising every day at the same sort of pace. So my question actually is the opposite. How long will the effect of the Ukrainian war be on the market, and how quickly actually the market will wake up and say, well, actually the whole sentiment is not destroyed, but I mean, demand will be impacted as well, and therefore prices will start moving down because the economy overall globally will be negatively impacted.
With the start of the war, Turkey has received huge billet and HRC demand from CIS major export destinations, and has been forced to accelerate scrap purchases as their purchases were largely missing for April shipment, and this has caused prices to jump by more than $135 in 3 weeks' time.
Is Asia a new market for pig iron? At the moment, every company in Russia is looking at redirecting their production, starting from upstream to downstream, anywhere, and literally working 24/7 trying to find how and where to sell it. So it's quite possible that pig iron, which is not sanctioned in Europe, which is probably one of most in demand products at the moment, pretty much everywhere, will be the first product that will be finding its ways to new destinations, already established destinations. It's logical that people are looking at China and other Asian destinations, not just for pig iron, but for other products. But let us not forget that technically, again, Russian companies can still export even to Europe if they find the acceptable terms, both buyers and sellers.